there is still that need. There are still people that you need to move.
We don't think rates, despite what some lenders are telling their customers, are going to go to 10%.
Are there any ways to prepare people as their terms are coming up to be ready to get as low a rate as possible?
2017 was a busy year, and rates were around high 2s, low 3s then. So it is going to be some shock for these individuals when they do come due.
Hey, it's Alex with RE/MAX Select Properties.
And Dave Goodison, Forefront Mortgages.
And this is your market update for November 2022. Wow, the year's almost done. One more month.
What a year.
Yeah. Crazy year. Next year's going to be even more eventful, I think. We have the cooling off period coming in January 1st in real estate.
Yep.
We'll talk more about that probably in the next episode.
Foreign buyers too.
Yeah, it's banned. Okay, so stats. Last month in October, we saw Vancouver East detached went down price-wise 1.3%. Vancouver West also went down 2.1%. Townhomes, Vancouver East went down 3.9%. Vancouver West went up 1.5%. Condos, Vancouver East went down 1.2%. Vancouver West went up 0.7%. So I think we're starting to see a little bit of crack, and we're seeing a little bit of I don't want to call it stabilization. I don't think we're there yet.
No.
Just more of that hint of, there is still that need. There are still people that you need to move. They need to, for family needs, or location needs, work needs, whatever. Those people are still obviously in the market, and they're the ones kind of suffering with the interest rates.
Yeah.
But they still have to do what they have to do.
Yep.
So we're kind of still seeing those, what I call cracks, actually quite evident if we look at some stats in more detail. Downtown inventory last month went up 1%. Solds remained the same, so it's kind of stable from the previous month. However, Vancouver West Side, detached homes, inventory went down 11%, but solds went up 35%. Condos, for example, Vancouver West Side, condos and townhomes, inventory went up 4%, solds went up 18%. So it's starting to crack a little bit here.
Interesting. Yeah.
Yeah, the activity's still there, and I think prices are still continuing to drop a little bit, maybe with the rise of interest rates. Obviously, we got another rise already, and we're expecting probably one more.
Yeah.
What do you think?
Yeah, I think, on the fixed rate side of things, everything's over 5.5% right now. So we had previously been using strategies where we'd lock people in for 1-2 years, and they get significantly lower rates than the traditional 5-year rates. That's kind of gone away now with the yield curve inverting a little bit. So yeah, generally speaking, all rates are over 5.5%, variable rates around 5.5%. In December, early December, another Bank of Canada meeting, they're going to raise rates again. We're kind of hoping that it's on the low end, so hopefully just a 1/4 point increase, but it'll be anywhere between 1/4 and 1/2 point. Yeah.
Yeah, so obviously with the interest rates the way they are now, not as many people are buying and selling as last year at the same time, but I'm sure there are still a lot of mortgage renewals of people staying in their homes and needing to renew. Right now it's end of 2022, so 5 years ago, 2017, that was a big year, as you know, of purchase and things like that. So that was a big real estate year. So all those people are coming up to term.
Yep.
And they're going from the 2.5% to now 5.5%, 6%.
Yeah.
So are there any ways, not around, but any ways to prepare people as their terms are coming up, to prepare them to be ready to get as low a rate as possible?
Yeah, I think it's generally speaking, as you just said, normally we have 5-year mortgages in Canada, so either 5-year variable or fixed. That's traditionally what the product that's most heavily advertised and discounted for consumers. So roughly 20% of people are going to mature every year.
Right.
2017 was a busy year, and rates were around high 2s, low 3s then. So it is going to be some shock for these individuals when they do come due. A couple of things you can do, or the main thing is to be proactive, I would say. So what we're seeing from lenders at renewal time is usually they're not reaching out to their customer well in advance to start discussing. What we're seeing is more, they send them an email with some rates, and the rates tend to be higher to do a 1 and 2 year term, and then the 5 year looks more attractive. We don't feel that locking into a 5 year term right now is the smartest move, because we feel rates are going to come down in a couple of years. Not to where they were, but certainly lower than where we're at right now. So talking to somebody about it, whether it's your existing lender or mortgage broker or mortgage specialist, just talking to somebody about where they think rates are going. It does depend on when your mortgage matures. I've had clients talk to me about their mortgages maturing a year out, and they've been really nervous and coming in to want to renew now. Depends on your individual situation, but again, don't think that's a good idea, because you're foregoing a really good rate for a year, and why bother, right? Like, we don't think rates, despite what some lenders are telling their customers, are going to go to 10%. So, I don't think, why would you give up 2.5% for a year right now just to lock in? So yeah, so being proactive in the means of having a strategy, coming up with a plan. So if your mortgage is due in a year's time, you can have the conversation right now. Probably wouldn't recommend that you action anything, but at least you have a plan, and then hopefully that helps you sleep a little bit better over, between now and renewal, because rates are going to jump. Your payment's going to go up. If you work with a mortgage professional or your existing lender, get some rate holds in place. That just gives you a little bit of insurance. Again, don't think you should do anything a year in advance, but come up with that plan for the rates and what you're going to do. And I think that's the best thing you can do. There's just so much news and noise right now. A lot of people are operating in the unknown, and that's pretty scary. So yeah, have the conversations, be proactive, get some insurance in place with rate holds. Yeah.
So essentially, just be informed.
Yeah.
And don't jump to a decision based on a guess.
Guess or just like headline news too,
Yeah.
right? Like, honestly, we've had clients that they've talked to me after their lenders talked to them, and they've said that so these are representatives of the lending institution saying that rates are going to go to 10%. Like, I think that's terrible.
Yeah.
There's enough scary news out there for individuals. The reality isn't going to be that as bad. There's bad news for these people renewing, because you were paying 2.5, and now it's going to be 5.5, right? So that's going to impact your budget. So yeah, I think getting the real news is best.
Yeah. Okay, cool. So any questions, please reach out. David Goodison with Forefront Mortgages. And if you're looking to buy and sell, we usually team up quite well. So give me a call too. Thank you so much, and we'll see you next month.
Great. Thanks, guys.